Come on now.
Hey YouTube universe, in this video we'll take a look at 4 accounts that I used to generate $2,500 of income in the first week of 2021. I said income, not capital appreciation. Enjoy. Hey, good morning, guys. It is Saturday, January 9th, 2021, at approximately about 4:30 a.m. I couldn't wait to get up this morning to go ahead and finish this video. But before I get into it, do me a favor, go ahead and hit that like, subscribe, and that notification buttons. That'll help out the YouTube algorithms. All right. The reason why I couldn't wait to do this video today is because I wanted to share with you my first week of income in 2021. And this is income from selling option premiums. But also, I want to share with you why I do this. I want to share with you how my focus and priorities have changed from that of a majority mindset to that of a minority mindset. And I'm not talking about religion or race or anything else like that. I'm talking about the minority mindset when it comes to building wealth and making money. So that's what I want to share with you today. All right, let's go ahead and get started. Hey, this chart right here is a game changer. It explains why the rich get richer. Look at this here. Look on the rich side here. You see that they use their income to buy assets, and then their assets starts generating income, which is pretty much a reoccurring cycle. A never-ending, always increasing cycle. Income, assets, assets, income, income, assets. Wow. Now, that's the technique that I am using right now to increase my net worth. So let's go ahead and take a look at my accounts. Hey, this first chart here is nothing more than a breakdown of my 4 accounts. It looks like I have 5 accounts, but it's actually 4 accounts. Dividends received so far is $1.91. I have a Fidelity rollover IRA account. That's $944.59. That's how much it generated. That E-Trade account is a dedicated account for that Making Money Mondays. I got $12,000 dedicated over there, and that's it generated so far $708.60. Have a fun account, and it's just what it says for me to have some fun with. So far, $179.35. And my Roth IRA account, that's pretty much where I keep my dividend portfolio along with some other stocks that I'm trying to accumulate. Bottom line totals 2508.15 for the first week in January. All right, this here is a snapshot of my Roth IRA account with Charles Schwab. Now, that's a tax-free account. That's why I love the Roth IRA. And trust me, guys, if you guys qualify for a Roth IRA, you need to have one. All right? It is a must. Yes, you're using post-tax money to build up this account, but trust me, as it starts to grow and accumulate, and you start to accumulate wealth in this year, when it's time to use it, guess what? You don't have to pay taxes on it. All right. So what this here is just illustrating that the part of my income that I received this week was I received $1.91 in dividends. All right. My dividend portfolio is in my Roth IRA account. All right. Dividends are true passive income. No matter what you do, if you don't do anything for a month, incapacitated or anything else, guess what? Your dividends are still going to come in like clockwork. This here is a snapshot of the estimate income that I'll have based upon the dividend stocks that I have in my Roth IRA account. As you can see right now, we're only looking at the first week of January. But if you look at this here, it shows that right here that in January of 2021, I'm projected to get about $240. Last year, I was a little bit over $3,000, and my average monthly income from dividends was 251 bucks. So right now, it looks like I'm going to be above that. Now, I have a goal of 2022. When 2022 hits this same time next year, I want this to estimate that I'm going to get, at least $500 per month. And the way I'm going to do that is I'm going to use the money that I generate from my Roth IRA account when it comes to selling premiums. I'm going to use that money to buy and to build on my stocks that pay out dividends. So I'm going to definitely increase that. That's going to be a huge focus of mine. Hey, my Fidelity rollover tax deferred account, that was able to generate me $944.59. Here's the breakdown. This is my activity in this account for the first week of January. As you can see right off the bat, you see that on the 7th of January, I actually entered into I bought some shares of a company called Special Capital Holdings. They're going to do a SPAC, a special purpose acquisition company, a SPAC. It's a way to introduce new companies to bring them public. And they're going to merge with SoFi. In other words, SoFi is going to become a publicly traded company. So the new techniques that they're using right now are SPACs, and which is special purpose acquisition companies. That's how they're bringing them to market versus the old IPO method. So I wanted to get in early on that. It was like $17.46 a share. So I bought that. I bought 100 shares of that. But the income that was actually generated, I generated the income from one of my favorite companies out there, Workhorse. All right. If you notice there, I had 100 shares of Workhorse. There, I sold a covered call. And if you look, the expiration date is December 17th of 2021 for $35. All right. A Workhorse currently, I think it closed yesterday at 25.76. All right. You know what? It was a way to generate some income off of that later on down the line. If it never reached that 35, then that's great. But the bottom line, that's one of the companies that I'm planning on holding for a while. And one of the ways that you can also generate income on that is actually by selling premiums. And I do those with the companies that I want to hold for a long time by selling leaps out in the future. So, but that one there generated, think about it, a $25 stock that I'm saying I'm willing to sell back in December for $35. They paid me $730.29. I had a GE call that expired. All right. And also, that's nothing there. So that's why it's zip. And then I also sold a cash secure put on Workhorse. All right. For $20. All right. And I did that on the 4th. And on the 4th, I think it was trading in about 20. What was it trading at on the 4th? On the 4th, it was trading at 21.42. All right. You're going to see a lot of Workhorse cash secure puts and covered calls. And the reason why is because that's a company that I believe in. I'm planning on holding long term, but also it's a very volatile company. Companies like that can generate a lot of income. Guys, you got to start I think of my stocks as my employees. And for last year, I have some very VIP employees. Workhorse was definitely one of them. Fuel Sales, GE, IVR, and American Airline. Those were my VIP employees for 2021. That's where I made a lot of money off of. Workhorse was definitely one of them. I know Workhorse inside and out. I know everything is pending. They're waiting on the U.S. Postal Office whether or not they're going to get part or all of that $8 billion to replace that last mile vehicles and all those postal trucks that you see. They're in the running for Workhorse is in the running for that huge contract. All right. So until that's announced, that stock is going to be volatile. Uh, I'm telling you right now, anytime Workhorse gets about $20, I'm going to sell a ton of cash secure puts, start collecting that money as fast as I possibly can because I know that around that 20 and 19 and $20, that's the support for it, and it's going to bounce off of that. And once that news hits, then it's definitely gonna take off at that particular point. So I love Workhorse. I love it when it's volatile, and trust me, I'm going to do that. And what you're gonna find, probably now to the middle of March, every week, I have a cash secure put that's going to expire with Workhorse. I just had one also into my Fidelity account that expired yesterday. Once again, it was a cash secure put for $20. It was above $20. Guess what happened? That $2,000 that they kept as collateral went back into my account. So on Monday morning, my account will have $2,000 more of available money to either withdraw or to invest. And I'm not going to withdraw it, I'm going to invest it. All right. All right, here we have our Making Money Monday trades. Um, this one here, if you're following me on Making Money Mondays, you already know we're up $708.60. And once again, what you're going to see is that we were able to close out a Workhorse play for $20, a cash secure put, as well as we entered into a switchback energy, which is a charge point, another SPAC charge point. And we got two contracts for that for $40 with an expiration date of next Friday, which is the 15th of January. We were able to pick up $482.65 on that. All right, let's see what's next. But that's in my E-Trade tax. That's a taxable account, and that's what I use strictly for the Making Money Mondays. All right, this here is my Charles Schwab, my fund account. This is also another taxable account. In this one here, if you notice, once again, I did it in Making Money Mondays, but also I'm doing it in my other accounts to generate income. Guess what? Workhorse, once again, we're looking at, looks like a 29 January expiration date for the $20 strike price. And right now, like I said, Workhorse is at about 25. It closed at 25.56. It's about $5.56 away from that strike price. Chances are it will expire worthless. That $2,000 is going to go back into my account and I can do something else with it. But it was able to generate me $179.35. And now we get to my Roth IRA account. All right, Roth IRA account. I was able to generate $673.70 during that first week. And here are the breakdowns. All right, and keep this in mind. That Roth IRA account, no taxes. All right. So far, $673.70. Let's see. On this one here, I sold looks like a put for Virgin Galactic with a expiration date of 15 January 2021. One or two things going to happen. I sold two contracts, picked up $150.67. One or two things going to happen on the 15th of January. Either it's going to be above 24. If that's the case, it expired worthless. And that $4,800 is going to go back into my account to redeploy. Or it's going to be below, either at 24 or below 24. And guess what? I'm going to buy it at 24. Not a problem because, guys, I like Virgin Galactic. I want to collect shares in that, but I'm going to do it at my particular rate. And that's one good thing about selling cash secure puts. If you want a particular stock, if you're going to buy 100 shares of a stock, if that stock is optionable, guess what? If it's at a $25 stock and you want to buy it at 23, why not get paid for it? Most people would just put in a limit order for 23 and wait. This is one better. This is like putting in a limit order, but getting paid for it. I put in a limit order for $24. They paid me $150.67. You got to learn this technique. I love it. All right. And also you can see with fuel cells, this was easy money. Fuel cells, cash secure put, bought 5 contracts. That basically means $5,000 went into collateral for a expiration date of 15 January 2021 with a price of $10. Last I looked, fuel cells was trading about 16, 17 bucks. So chances are it's going to expire worthless. Even if it doesn't, I'll still pick up 500 shares for 5,000 bucks. Fuel cell energy is also another very volatile stock. So if I get it, great. If I don't, that's cool too. Guess what? Regardless of the fact, I made $276.69. The next one is my workhorse. Look at that. All right. Once again, like I told you, workhorse gets around $20, $21 and below. I am selling cash and could puts week after week after week after week. That is easy money. One contract, one contract with an expiration date of February 12th, 2021. And the way I have it structured right now, I have an expiration date for Workhorse for the $20 put, $20 or below, cash secure put, for every Friday, expiring every Friday between now and the middle of March. All right. For this, I picked up $246.34 total so far for the month in my Roth IRA account, $673.70. What I'm going to do with that money, I already told you. The second week in February, whatever that total is, all I'm going to do is 70% is going into my dividend plays. The other 30% of those stocks that I have on my watch list that I'm in the process of accumulating. You know, Tesla's there, Apple's there, Berkshire Hathaway, Boeing, and also that Planet 13, that MJ play. All right. So, as you can see, that's how I generate that over 2,500 bucks in the first week in January. All I am doing is just using what I see right here. I am using what the rich uses in order to create their wealth and make their money. Their assets generate income. They use that income to buy more assets. They're focused on increasing their assets so that way they can increase their income. They're not working in this rat race with the job and doing the opposite so far as getting an income and going out and creating debt and having liabilities and increasing their expenses. No, trust me, once this starts to work, once you have enough assets to start to generate income, it will take on a life of its own. Remember, the 3 things when it comes to building wealth that I'm going to actually do a video on, but these are the 3 fundamentals. You got to understand compound interest. But in relationship to that, you got to understand the rule of 72. In other words, at what rate does your income double? You got to know that. And then you also have to understand exponential growth. Those 3 are interconnected. Most people only know about one of them individually. You can't talk compound interest without the rule of 72 and exponential growth because that's what the rich are using. After a while, this income to assets to income, that's an enclosed circle that continues to get bigger and bigger and bigger and bigger. That's why the rich keeps getting richer. And the poor keeps getting poorer because guess what? They're using their income to buy liabilities. Stop it. I've said too much already. All right, guys, let me go ahead and close up. Remember, always remember, results doesn't happen overnight. It takes time. Work hard, stay consistent, and be patient. And please, Get off this kick that knowledge is power. Knowledge is not power. It's the application of knowledge that's power. Hey guys, I see you in the next video. You guys take care.